As we are 90 minutes into the start of today's trading activity, stocks, they're edging higher ahead of November's CPI report. That is due out tomorrow. Joining me now here on set, we've got Robert Pavlik, Bob of Dakota Wealth Management. He's the senior portfolio manager there. Great to have you in studio with us.
Thanks
Bob.
for having me back.
What are your expectations, especially as we are all geared and revved up for tomorrow's inflation data?
I think you're going to see a little bit of an increase in the CPI numbers. They've been trending a little bit higher, which is not, favorable to the Fed. But I think as it relates to the Federal Reserve is probably going to cut interest rates next week. And then I think that's going to be a reason to pause with these slightly higher inflationary numbers. But I think as we go into 25, I think you're starting to already see some signs that the economy is slowing. Look at manufacturing, look at some of the numbers in the employment area. And I think the Federal Reserve is going to be on pause for a little bit. Then they realize somewhere, late spring that it's probably going to be time to start getting into this rate cutting program again.
Interesting. And so what is your forecast and your outlook for the number of cuts and how the markets would ultimately appreciate that or digest that, I should say?
So what I'd like to see for next year is another 1% in total cut. Now, do we get there? I think it depends on a lot. It depends on inflationary numbers. It depends on how the economy is doing. There are aspects of the economy that are doing well enough. I mean, Powell has come out and said that same thing. But whether or not it continues to hold up is the major question. There are questions about Trump's policies. Now, we all know Donald, especially us in New York. We know what he says doesn't always translate into exactly what happens. And so I think you have to take it with a bit of grain of salt. So does that mean interest rates continue to sort of trend up? I don't think so. I think, right now at 423 is probably a number that it should come down from. I think, if we can get to 405 or 4% on a 10-year treasury into early 25, that's actually a good thing. And then I think we could trend down a little bit further later in 25. But I think for the S&P 500, I have 6150 for year-end target this year.
Okay.
But then, because I think the economy is slowing and I think the Federal Reserve is going to be on hold, you're probably going to see a little bit of a give back. And so I could see 5850, 5825 by mid-year. But then again, I think as rate cuts come in, as the economy gets a little bit of a boost from these rate cuts, because not all of Trump's policies are going to be enacted, I see 7,000 for a year-end target for next year.
Interesting.
So from 7,000 to from 6,150, you're talking almost 14%. So a pretty decent year.
So, and that would be after not an all-out correction, it would seem, for the first half of the year in your outlook there, but an extreme bounce back even off of the pullback that you're anticipating.
Yeah.
What are some of the areas that could be heaviest hit in that initial pullback? And then on the back half of the year, if you will, the mullet trade, as we've heard it talked about in the past, where that could initiate even more interest from investors?
So what could get hit? I think pretty much all areas of the market are going to probably feel the pain under that, getting us to like 58 quarter figure. So I wouldn't be freaked out in getting out of the market. I'd use that as actually a buying opportunity. And so what I would turn your question around and say, what areas of the market do I want to focus on? I want to focus on, I think, what's going to work. If we have a slowing economy, people generally try to grow the value of their portfolio. So how are you going to do that? So communication. So I'd look at things like Netflix and Google or Alphabet on any kind of pullback. In the consumer discretionary, I'd look at Amazon, and then I'd take a look at RCL, which is Royal Caribbean, has done extremely well, but I wouldn't be buying it here. I'd wait for a little bit of a pullback. Finance, I'd take a look at the money center banks. I don't think the regional banks are going to be sort of doing as well as they have done. They rely too much on demand growth, loan demand growth. So I think the money center banks, and I also would take a look at like an insurance agent like AJ Gallagher. In industrials, I take a look at something like United Rentals, which is getting hit today, but I don't think it's time necessarily to be buying that. If you want to do a little bit of buying into United Rentals now, I would say just add a little bit and wait for a little bit more of a pullback. I'd also take a look at Eaton, ETN, and then I'd take a look in the technology space. And so what I like in technology is Salesforce reported a great quarter. Well, I guess a pretty good quarter, we could say, but very optimistic about their new products. And then I take a look at Arista Networks, ANET, which has done extremely well. Demand for servers for the data center. So those are my areas of the market that I take a look at. I wouldn't be buying it now, but I think you have to make a list. Just like going to the grocery store, you have to be prepared as what to buy.
Right.
So that's what you need to do. You have to be prepared, you have to have a list, and you have to look for bargains when they come up.
Certainly. Bob, thanks so much for
You
taking the
bet.
time here,
Thank you
laying
very
out
much.
some of the bargains that you're going to be watching out there in the markets.